Good afternoon, everyone, and welcome to the Market Close Report for Tuesday, the 19th of May. So quite a solid rebound for our market today. In fact, the ASX 200 rose by about 99 points. That's a lift of almost 1.2% to 8,604. It actually means that we finished very close to the best levels of this session as well. Reports that it's being boosted basically by President Trump holding off fresh military strikes in Iran, something he was threatening recently. This is supposedly after an appeal from Persian Gulf allies who basically called for more time to try and pursue a diplomatic resolution. I think one key point to remember here, though, is that it does follow one of our worst declines of the year. Yesterday, our share market was down by not only close to 1.5%, it also sank to a 7-week low in the process as well. Also tonight, we've got futures pointing to a decline in US markets when they reopen this evening. Bond markets have also seen some pretty significant moves in recent times. So even though things have calmed a little overnight, bond yields are still quite elevated. We still have markets now pricing in interest rate hikes across most of the global economies for the remainder of the year as well. All of this certainly not helpful for our market. As far as sectors go today, though, only two actually fell back. It included the materials, which were down by about 0.1%, 4 straight days of declines for the miners now, and tech stocks, which have been big movers in both directions recently, down in the order of 0.5%. Outside of those two, there are actually gains everywhere, very much a reversal of the widespread declines we had yesterday. So today, one of the best performers, communication services, which was up around 2.6%, consumer discretionary up in the order of 1.5%, consumer staples, those big supermarket chains, rose in the order of 3%. They were the big winners. Let's look at some of the individual winners, though. We had Tuas Limited, 17.6% higher. In isolation, it looks like a very strong improvement, but in context, not so much. Yesterday, 62% lower on the market. Now, Tuas operates a mobile network in Singapore. It's, I guess, considered to be a bit of a smaller challenger brand, but its shares slumped yesterday because of Singapore's tech and media regulator that basically pressed pause on a review of a proposed takeover offer that it had on the table for another telco called M1. This is a deal that it struck 9 months ago, and basically the regulator said it identified a potential breach by Tuas's group over in Singapore. So the market did not respond well to that at all yesterday, because this tie-up was going to potentially take Tuas from being a challenger brand to being the third largest. So today, though, it did bounce back. We had Ora Banda Mining, the gold miner, up around 6%, was up around twice as much earlier, did fade a little from the highs, but it's the 15th largest gold miner on the ASX, had its share price target raised by a broker today, and this is a day after approving a major expansion for its project in WA. Bellevue Gold up around 2% as well. This is a slightly smaller gold miner. Said it's managed to mine first ore from its Deakin North mine in WA, not only on schedule but also on a budget. So markets like this at a cost of about $18.45 US an ounce to about $2,060 per ounce. Putting that into context, gold prices, sitting roughly at $4,570 US dollars per ounce. So what has been very helpful for many gold miners over the past year or so is the fact gold prices have largely been at or pretty close to record levels. And also Woolworths up around 3.7% today. The supermarket chain received a broker upgrade. A reminder, though, it did fall last week after the federal court ruled that its rival Coles misled shoppers over some advertised discounts. Now, there were losers on the market today. Technology One was one of them. It fell by about 2.9%. It builds software that helps governments and large corporations, universities as well, with things like payroll, HR, finance, I guess to run their back office jobs. Posted its 17th straight record first half profit, said it's on track to meet its goals for the year, raises dividend about 20%, and said it's on track to double in size every 5 years. But the results seem to fall a little shy of what the market was expecting. So again, a good reminder that the market responds more to whether or not it meets analyst expectations, at least initially, compared to whether or not it's seeing growth in earnings and revenues. And 4D Medical down almost 9% today. It develops software that enhances X-rays and CT scans. It was up earlier in the day, but did follow a study in a prestigious journal which basically validated its technology. Megaport about 2.1% lower. This is a tech company that helps businesses connect to cloud services. Well, it fell today, did announce a board change, but also share price target upgrade by a broker received a bit of attention. Reminder though that yes, it's down today despite that news, but last Thursday it rose by almost 30% in one day after 3 big contract wins. And Lynas, the rare earth minerals miner, it was the only improver on the amongst any mining stocks on the ASX 200 just yesterday. So it is coming under pressure today, down in the order of 4.2%. Now, there was a bit of economic news around today, a couple of surveys on how consumers are feeling about their finances. Interesting stuff here. Somewhat surprising, perhaps, that we had consumer confidence in May actually lifting by 3.5%. Now, this was put down largely to the lower fuel prices. We know that the halving in the fuel excise tax has basically shaved off something like 30 cents per litre in petrol prices on average at the pump. However, some of that positive news was probably reversed, I guess, when it comes to the that rate hike we had earlier in the month. Interestingly, the reaction to the federal budget was mixed. We actually had 34% of respondents, saying that they're probably worse off from the budget, but the hardest hit, of course, baby boomers and Generation X, they reckon they'll be significantly worse off in the budget. We had millennials saying they'll only be slightly worse off, and then the younger generation, Gen Z, those under 27 reckon they might be actually slightly better off. And then we also had the Reserve Bank in focus, the minutes from the most recent RBA meeting when the central bank raised interest rates, basically highlighted that rate hike gave the RBA a bit more space and time to see how things unfold as far as those 3 rate hikes and what impact it could have on the economy. So the market now reckons there's roughly a 13% chance of a rate hike next time they meet in June. A couple of days ago, it was sitting at about an 18% chance. Now, let's look at currencies. The Aussie dollar sits at about 71.3 US cents, also softened against the euro and the Japanese yen. Tonight, we do have a few bits and pieces out, none that's probably going to be significant market movers, but we will get some figures as far as earnings from a couple of major retailers in the United States. So that will be something to keep a close eye on. On that note, have a great evening, everyone. Make sure you tune into the morning video with James. We'll get you up to speed with everything happening in global markets and get you ready for the day ahead. Ciao.